So this is going to be a series. We will start with how to trade, price action. There's going to be a bunch of videos that I will post, but I want to start with some basics that people need to think about while they're trading. One major thing is that a lot of people do is they will have 20 indicators going on. They will have a buy and sell signal. Oh, there's a buy signal here. And that's based off of like some indicator, some EMA crossover or something, And oh, a buy signal came and I'm just going to buy it. Again, I'm just going to blindly follow it and I'm just going to trade that, right? Some people are looking at this MACD, RSI, and like a bunch of things, right? Too much going on your screen, and you're not able to concentrate. You are relying on something rather than trading what you see. Okay, so first thing you need to do is you need to remove all of that stuff off your screen and start looking at price first. The most important thing is price. Price will never lie to you. Price will tell you the truth. So the goal is always trade what you see. Okay. And no matter how unlikely something appears to be, believe the chart, okay, not your instinct. And like I said, trade what you see and not what you hope to see, or expect to see. Because a lot of traders will be in denial, and they're like, "Oh, it's going up. Oh no, I'm gonna make money. It's going up," but then it starts coming down. Just give me an example. Bought here and you're like, oh, it's gonna keep going up, but then it keeps coming down, and they're like, no, it's gonna come back up, and the denial is what costs people money. Okay, you have to understand that there's algorithms, there is high frequency trading, crazy bots out there, millions of dollars, and they're trading the market. They know exactly where your stops are set. They have all the information. Okay, they know where people are buying. They can look at the flows. They can look at tape. They know exactly where the orders are and how to trade. Okay, you could be 100% right that the market is going to go up. Okay, but how it's going to go up, you can't predict that. Okay, it could be sideways action. Let's just say you were expecting market to go up. It could be sideways action in a trading range, and then we decide to go up. Okay, and it could be, okay, we are going up, but this is the top. We're not going to go up anymore, and it comes back down. Okay, so you can't predict how, when, where. Okay, you can expect like, okay, market is going to go up, but in order for it to go up, certain levels need to break and price needs to respect those levels, and as long as those levels hold, we can continue seeing a direction. Okay, just simple. Not like, oh, it's gonna go up today to like 6150. Okay, and I'm like sure of that, and I'm going heavy here, and it's finally going to break, it's going to go all-time high and all that stuff, and we go up here, and then sellers come in, and then you're in denial, and you think like, oh, it's going to come back up because it's the bottom right here, and we broke through this level here, and now we came back to this level, so the next candle that's going to open up, we're going to reverse back, and then next week we're going to continue going higher. Okay, that is going to mess you up big time. Okay, so you need to learn to trade what you see. So how do we do that? Okay, first thing is, yes, we broke out of this, price is holding, so most likely traders will be taking a trade here. Okay, traders take a trade on this candle open. You can draw a channel. Okay, so you can draw a channel, and you want to see what what price does and if it stays in a channel. Okay, price is staying in a channel, trend is falling, you stay in the trend. Okay, drawing your support and resistance is key. Okay, and you want to draw it based on key levels. Okay, so the key levels is there were sellers here, right? As you can see, there were sellers here. And why did we reject here again? Because one thing you want to understand is not all orders get filled at once. Okay, let's just say like there were $400 million order here, for example. Okay, this is all hypothetical. Okay, $400 million order here, and they sold and only half is filled. And they're like, okay, the other $200 million, I'm going to still keep it here. And the next time price comes here, it's going to get filled. Okay. And that's what happens. Okay. So that's liquidity, algos are going up, grabbing those orders, letting them fill in, coming here. There's some buyers here, fills in, then goes up. Okay. So we know that there were orders here and, they got filled, and then the buyer's order got filled and we went up. And we can see that you want to look at the last time we saw buyers stepping in, right? What happened? Okay, so buyer stepped in, we went up, but we haven't tested this level here again. Okay, we haven't tested this level here again. So we are going to come back maybe today, maybe tomorrow, maybe a week from now. We need to come back and test this level and see how much strength is still in this area, because this is where buyer stepped in and we held it. Okay, so we came back and we tested this area again, and buyer stepped in. You can see the long wick. Buyer stepped in and they wanted to buy here, and we pushed up. Okay, so now since this area was pending and it's not pending anymore, then from here, this level becomes pending, and this is your key area to watch. Also, this becomes your key area to watch. So what do? You draw a level. As you can see, we're on 10 minutes. Okay, that's what I trade on, 10 minutes. And I usually draw my levels on the hourly, major levels, like we just did now. So we draw your major levels on the hourly, and then 10 minutes you can draw like your small levels. Okay, so like when you're trading throughout the day, you can draw your levels for the day on the 10-minute. All right, so the hourly, you got the bigger picture, right? You can see that buyer stepped in, we came back, stepped in again, we went up, broke through this. We can definitely see resistance here, right? So we just draw a level here because we hadn't tested this level before, right? Since we came down, we had some buyers here, but the next day, as you can see, Monday, where we opened from Friday to Monday, so it's a huge, gap, and price is going to come back and fill, okay? Because you can see continuous selling, and that is showing you that there were a lot of orders. Sellers were pretty heavy. So next time when you come here, you need to watch for that. Okay, so if you see a rejection, trade what you see. You're seeing a rejection, orders are still there, and you need to follow the trend. Okay, so that's your hourly. And always, like I said, remember the last time a price was at that point, that's what you want to really focus on. Those are your major levels. And as you can see, I do it on SPX. And if you're trading SPY and you're trading SPX, you would want them side by side. Split the chart here. You can see both screens. SPX, I like to seeing the level because the algorithms and everything, it's easier to read the price action on SPX because things move much easier. They will move in 20s, 40s, 50s, 70s, 100s. So the price action is good. It's easier to read. It's easier to mark these levels and see what price is doing. Okay. So now you have all these levels. So let's just get back to our price action, right? And all these stuff that I'm just talking about earlier, I was just like going through it. I have posted videos about this before as well, so you can go and check my previous videos about the price action and all that stuff. So in there, I go in more in depth about how to find out where the buyers are. But this was just like a quick recap. But if you understand it, you don't need to go back and watch those videos. More videos are going to be posted in the future, and you'll be able to watch them and learn a lot more. Okay, so we are talking about this channel here. Okay, so two things you can do. First thing is, like I said, you need to watch the price action, and you can draw a channel here, and you can see, okay, price broke out of here. So this is a key area to watch, and I took a trade based on the open of this candle because we broke out of this. So you draw on a 10-minute, you draw a level. You can color code this into something different. So this is your, for the day trades, these are your levels for the day trades, and these are your major levels. So you keep it clean. You want to keep your chart clean. Okay, you take a trade here. You're following the trend. The price is holding, the trend is holding. You can continue and raise your stops and take profits, right? Good trade. Okay. Now, some people would be getting in here. Some people would be getting in here. They get in here, they see these candles, and they see like it's going up, then it comes down. Okay, so for them, their entry is here, right? So this is like, so their entry is here. So this is like their stop, right? So if this is their stop and their entry was right here, and they see the channel break and they come down, some people will be like, oh no, it came down here. It came down right here, so we're going to continue going up. But it's not going to do that. It's not going to continue going up because you don't know that. Okay, and the reason you don't know that is because you're in denial. You're in denial that, oh, it's going to go up. Okay, but you're not trading you're not trading what you see. Okay, and what you see is that there's this channel, and we were trading in that, and we had a breakout out of this channel, and now we are trending down. So most likely we're going to come back and test this area to see if buyers still have strength, if we're going to continue going up, right? Okay, basic price action. As we can see before, we know this, that there were sellers here, and this area hadn't been tested since we came down. So now, the thing is, if you missed out on a trade, you do not want to chase. Okay, you want to wait for the next setup. Next setup was, we went up here, we had a rejection here, you take a starter put here, okay, and your profit targets are this area, this key area, and you need to have patience, okay? It takes time. Look how long it took, 11, 20, 30, 40, 50, then 12, 30 minutes, okay? A lot of traders, the mindset is scalping. They want to get in, they want to get out, but the risk and reward is too little. Okay, you could have some winning trades, some losing trade. You'll be back to break even, or you'll be down because probability of you being right all the time, it doesn't work. Think logically. So that's the thing, and a lot of traders do that, and they won't become successful. Scalping is good, but there's a time and place for that. Okay, so there's time and place for scalping, and that's what you want to do. You don't want to be always scalping unless you're a really professional trader and you've been trading for a while and you have a strategy that works for you. And if it works for you, great. Okay, but majority of the new traders, they are scalping without much knowledge of the market, without understanding and having a strategy that works. They haven't tested anything and they're just giving away free money to the market. Okay, you need to have some patience and need to trade level to level. Okay, because level are going to get tested one day or another. They're going to get tested, and that's what you are waiting for. So you took the trade because you know sellers were still in this area. We're seeing a rejection. You take a trade here. Your profit is here. You raise your stop. Okay, and you take, and then when it comes back up, you exit the position. Okay. First thing is you never want to go all in. You want to take a starter. If it's rejecting and following your price action, then you will add into that trade on this candle. Okay, you are not going to just buy 10 contracts here. You're not going to do that. That's stupid. Okay, you want to maybe take 5 contracts here, and then if it's respecting, you can add another 5. Okay, so this is your trade. Okay, so the thing is, the bulls that were still in the trade, they're in denial. Okay, and they are thinking that, oh, we're going to continue going up, but you can't predict that is going to continue going up. You can only trade what you see, and you look at the price action, 10-minute time frame. Bigger the time frame, the clearer the picture, the more easier it is. You want your screen to be clear and trade what you see, and what you're seeing is that price is going downwards. If that's where price is going, then that's what you want to trade, not what it could go. Yes, we can bounce off of here. It's logical. Why? Because we had bulls break out of this range. So this is support. And like I said, not all orders get filled. So we will expect a small bounce. Okay. This you could trade. If you're seeing prices holding here, okay, you could scalp this. Yes, this could be a scalp because you are seeing a small bounce or a reaction on these level. But remember, like I said, these are the day levels. So these are not going to have a bigger bounce compared to your hourly levels that you drew. So yeah, you're not going to see the bigger bounce based on the hourly candle like you draw compared to the 10-minute candle is because these are going to be weaker, right? So as soon as we can see that these levels are weaker because they have been tested, right? The bounce is also going to be weaker, okay? So we came here, we bounced, we came up above here, and we are seeing a rejection. So now, would you take a trade here? The answer is, best option is not to take a trade here. Why is that? The first rejections, the first bounces are better for you to take a trade because you're going to see a better reaction than usually. Sometimes you will just see sideways action. Okay, you just see the sideways action, and then we broke out. You see sideways action here. Nothing is really happening. You're seeing sideways action for a while, and then we come down. So a lot of times you're going to see sideways action. So the first reaction of a major level, especially like this one on the hourly, you saw that you took the trade and it worked out. You took the profit, and you see like it took some time to come down here. You took your profit, and now you're waiting for the next setup. And what's a good next setup? Okay, you had 2 setups today. You traded that. Okay, you want to trade good setups. And you had setup from here to here. Okay, and then you had a rejection from here, and then you came down. Now, what you want to look for is see what price does, because now price is looking for a fair value price. Are we going to stay here, build up here, and are we going to continue up? Okay, possibility. We can break out of here, go for more highs, or we could reject this later and come down. We don't know, but we will trade what we see. Later, we see that price broke out of here. Okay, so now we have a major level here. So how do we trade this? Price broke out. You are not going to take a trade on this candle because this is breaking out. You want to wait to see what the next candle does. And what's the next candle going to do most likely? It's going to come back and test this area. Why? This was the area that it broke out of. Algos want to test to see if there is still strength from buyers. If there's strength from buyers, then next candle can open up. We can come above this, close above, and we can continue going up. It could be a candle that is trapped, right? But when you open this candle, you're seeing that there is a rejection happening. Okay, there's a rejection happening, and we're coming up. So you took a starter here. So your loss would be in case buyers do come in and then we close above, your stop will get hit, right? So your goal should be to the next candle it open bearish, and if it's testing this, you can take your starter entry here, okay? And if the candle does open above, you will get out, okay? Because it's not going where you want it to go, all right? So you took your entry, your major level is this, you broke out of the range, and price is going to come back here. And what did price do? It came back here. You take your partials, you raise your stop, right? This candle open above, right? Open right here. And what do you want to do is you want to set your stop, like let's just say right here. And in case if it comes back up, buyer step in, you're still in profit, you took your profits and you have your stop raised, and you'll be out, okay? What did price do? Price ended up breaking out of this. So now since price breaking out of this, what did the algorithms do again? Algorithms came back and tested this level. And this level I just drew because you can see that we had a response from buyers here, and then we close this area. So this could be our day trade area that we'll watch. Price came down. It's coming down here. You can see that there were some buyers here because we broke out of here and then we open above. This is your another area to take partials and you take your profits, right? What happens next? Price opens up, and what is it testing now? It's testing the major area. And what are we seeing? Reaction. Okay, algos are going to test this area. Okay, they need to test to see if there is still strength from sellers or if there's strength from buyers to overtake this area, but there is not. You can see the price is respecting, right? This is why I was telling you, like SPX, I like to see because you can see that the algorithm reaction on price is much easier to see rather than seeing it on SPY. It's still easier to it still can be easy to read on SPY, but if you're new, I tell people I personally believe that it's easier to read on SPX, but you can see it for yourself that how the price action is reacting based on the levels that we drew. Okay, it's super clean, not too much going on. We have our hourly, we have our daily, we have our hourly candles, and we have our 10-minute candles that we drew the support and resistance on, and we're just trading that. Okay, so now, will you be taking trades here? No, you want to see what happens with price. Price came down, bouncing, rejecting. Okay, so the trend so far is that we are rejecting. Okay, we're in downwards trend, we are rejecting, and that's what we are seeing. Your next trade would be if we break out of here, then you have this major gap, right? You could also draw a minor level here, right? You can see buyers came in, stepped in here, big buyer stepped in. You could draw this as your level based on the reaction of the candles, okay? But why is this not a major level? It's not a major level because when this candle opened up, right, the orders went all the way down here, And this is where the big buyer stepped in, not here. Because if this was the way a big buyer stepped in, then we wouldn't have this wick. We would have continued going up, and then we would have marked this as our red candle. I mean, red support, right? But we didn't. We marked this red support. Okay, so hope that makes sense. So this candle broke, and a lot of people will be looking to take a trade here, but we're not going to do that. We're going to patiently wait. What happens here? We are seeing a reaction here, 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 and we're saying, okay, the trend is still continuing. Okay, the trend is still continuing, and we are still going down. Okay, so as you can see that it went up, coming down, going up, rejecting. Okay, so as soon as you're seeing a rejection and you're seeing that price is coming up and breaking these levels, then you can draw this level right here. So what's happening with price is this area, there's a bunch of orders, as you can see, the open of this candle, and you can see a rejection right here. So you draw a level here, and over here you can take an entry. Okay, you take an entry, trend is still following, and you can write it again down here. Okay, you could take an entry here, you could have taken an entry here as well, because what you're seeing is that price is coming down here, it's breaking, it's testing this area, and we're still seeing weakness and the trend is following. You can take an entry here. Okay, so this is just some ways for you to take the trades. Okay, and the thing is that we are trading what we are seeing rather than trading or expecting what it could do or where it could go. Okay, as long as it's respecting price, as long as it's respecting levels, we will trade that. Right? So this was more of an advanced trade. If you look, because we can see there is a lot of activity going on, so price action is going to not be that clear, which is why you saw that. Okay, let's just say if you want to take an advanced trade and you were in this trade, and let's say your entry was here and we came down, okay, and you don't want to take profits here, what you could do is you could raise your stop here, wait to see what happens with price here, right? Price is still rejecting, trend is still continuing, because you will expect price to come here. So you cannot set your stop here. You can set your stop above it, right? Because you would expect the price to come up, hold the candle here and go up, but you're not going to do that. You're going to set your stop here. This came down a lot, okay? Really good profit. You could get out of here, okay? Really good return on your trade. You know, we're at 6,100, came to 70, that's 30 points. It's a massive win. But if you want to, and you are looking to see, okay, I can see potential more downside, and you could see potential more downside because you are saying that, okay, you know, in case we break here, we could come back to this area, but we do have a major area here. You know, if you're expecting to gap fill. So all that is you predicting, right? You're still saying that, oh, it could go down more, it could go back up. And the only way we are able to do that is we will follow price, okay? So every trader does that, oh, it's going to go up, it's going to go down. Yes, that's completely normal. But we will, if you want to trade that, you have to trade based on what you see, okay? So if your entry is here, you got a good entry, okay? And you did not take profits here, okay? And you want to take an advanced trade, then, like I said, you want to see a reaction of these candles, and the reaction is still downwards. Then, once you see a reaction here and it comes down, then you can raise your stop here, okay? And then the next candles are going down and it broke out of here, okay? And you can see a reaction here, okay? And then what you will do, you will raise your stop probably right here because you can't raise it here. And then that's how those people get those big returns. Okay, does it make sense? So there's many ways to trade it. So you could have had 2 trades, okay, or you could have had 1 trade. Okay, either way you will come out because you're managing your risk and you're managing your stops. Okay, um, the entries, and we're letting the trade come to us. Okay, so this is just one scenario of how we are doing this. So other thing, like we're talking about indicators, right? Um, indicators that you can use, but for indicators to use, if it helps, you can use the EMAs. Okay, and the reason we can use the EMAs is we want to use the EMAs to just see momentum. Okay, like I said earlier, a lot of indicators are create too much noise. Okay, but there is, like, a basic indicator, EMA. It's all based off of price. Okay, which we can see, and we can use this. So why would we want to use this? The thing with indicators is they don't always work all the time. Okay, you're using an indicator and it's not going to be accurate all the time. So there's no consistency with indicators, because people will follow an indicator and they expect that indicator to pay them. It's doing this. Oh, it's going to make me a lot of money. Oh, it's doing this. The indicator said this is going to make a lot of money. No, you cannot use indicators like that. Okay, you use indicators, especially like those big ones, RSI and all that stuff. You use them for your technical analysis. Okay, they're good. They're good for that. If you go on like higher time frame, you can see a lot of things clearly. Okay, but a shorter time frame, if you want to use EMAs, I believe are good because they will help you with momentum. Okay, so you only want to use these when there is momentum. Okay, you see a breakout right here. Okay, you want to see price follow these EMAs, 5 and 9. 5 and 9 is a momentum EMA. Okay, these work on days when there is momentum. Okay, and you want to see is like when there's breakouts of these levels and you see buyers stepping in, then you can use these EMAs, because as you can see, the EMA is respecting the price. And how do we see that? Once you see the price is too far from the EMA, always expect price to come back and respect the EMA. As you can see, the 5 EMA, we are respecting that. As long as it's holding, the momentum is holding. The momentum is holding, right? 5 and 9 EMA are momentum. And once you see a shift, you can see that we had a shift in the EMAs and this momentum was holding and we came down. Break out of here, momentum changed, and as you can see, the momentum was still holding, and look how the price was respecting that, right? Okay, but sometimes you will have days like these where like the momentum, it goes up, it breaks out, and things like that, which is why I tell people that indicators are tricky. They're not always going to work, because sometimes it'll go out of the momentum, it will go up and down, and a lot of things can happen. Okay, so you want to use them, especially when you're seeing price break out of like big ranges, and it's going to go test a range. It's going to go test a gap, like this area broke, right? We had this in here, so we broke out of here, so this area broke, and we went up. Okay, so that's your momentum to see if there has enough juice to go test this gap. Okay, that's when you want to use these. Okay, otherwise you don't want to. Just want to keep it simple. I want to see what price is doing. Want to figure out, okay, we are in a range. Does it make sense to have EMAs trading here? You want to follow it once we are out of a range. Okay, once we break out, and what does price do, right? And 10-minute examples. Like you can see all everywhere. Price breaks out. opens here, comes down, right away closes below. Fake breakout right here. Okay, so if you took a trade right here, you're exiting, right? You're exiting this candle. Okay, so that's what you want to see, and the risk and reward to go towards you rather than the market taking your money. So like I said, the EMAs, they are momentum. So if you are trading, because you have to adapt to the market. So if the market is breaking out and we are holding levels, then we are a momentum trader today. And if you're a momentum trader, you want to see if the momentum is holding. And the momentum is like, as long as the channel, as long as the 590 EMA is holding, we're going to follow the momentum and we're going to ride it, because we don't know where it could go. But as long as price is respecting, we'll follow the trend, right? And you can see that, you can test that on names. Let's look at Tesla for a second. Let's see if we have any good momentum here. All right. As you can see, we went up, came up, the EMAs finally got tested. There was still momentum. Momentum held, and we continue going up. Okay. Broke out of there, momentum held, and there you go. So this is your big range. Okay. Broke out, momentum is there. We came down too much. Okay. And what did price had to do? Price had to come back and test to see if there's still momentum to go down, but there wasn't. And what does that do? If you're seeing that the momentum is not holding, is going up and is doing all that, then you don't want to trade that. You want to let the price settle. Okay. And the price eventually settled, and you can see price settling here, holding the momentum, and finally goes up. Goes up too much, then comes down. Okay. So let's go back to SPX. So this is part one. Part two, we will go over will be that how we can also buy our scalp as well. Even in weaknesses, we can buy and we can scalp, because we would expect how the candles will react based on price action. Okay, so this is part one. Let me know if you have any questions. I'm going to go over a lot more videos. I'll be posting a lot more frequently, so subscribe, like, comment. Let me know if you have any questions.